Everyone, just wanted to go through my recent trade on LMND and walk through how I was viewing it back in early November and now also how I'm viewing it in early December, and how these type of moves can take multiple days to multiple weeks to really follow through after you see a massive gap up and then trading around the high volume close. And that will be our center point for the majority of this analysis. So just to hop right in, first things first, we always want to look at the gap day volume, price percent change, and daily closing range, right? So here we have the highest volume in 1 year, clearly pointed on the chart, 47% price change on the gap day, and then 98% daily closing range. So those three characteristics tell us that institutions were accumulating big time on this, massive surprise post earnings. And, this then sets up our day two setup, which is using the high volume close, right? So we want to be looking then on day two and beyond to see how price interacts with the HVC. We can see on the 3rd of November, we gapped above the prior day close and never really touched the HVC. This theoretically is not a trade. I had orders set and got lucky, ended up selling, majority into 17.5 and called it a day. And then I was long these next 2 days, kind of took losses, should have been better on this day especially. Took a loss here and then finally took like the last, I think, piece of the trade-off here on this day, closing below, 15.9 or 15.7. So this, to me, I was out at this point, and then I just had it on the watch list looking and seeing how I was acting. The main thing you always want to see is just holding the gap day low. So at any time the HVC breaks, we want to hold the gap day low. I'll revisit an example with Path, which is had kind of shown the exact same action, and how it held the gap day low and was able to now retrace higher. So here we see a 20 EMA respect. That tells us at least institutions are in the name on weakness down here, low volume, and then higher volume back up, which is cool. So the thing then that stands out to me on this name is this area right here. So the low on this day is 1510. We go to the HVC, close right on it. Then the low here is 1525, and then the low on this Friday was 1528. So we had 3 separate instances of this unfilled gap up acting as support right on the 15 whole number. And that to me, again, shows institutions are in the name just supporting price, right? And so if we don't fill this gap down, hold above the 10 EMA and the 15 whole number, that is accumulation, right? So this allows us to place risk pretty, tightly. This may be 3 or 4% if you're buying it in the 15.5s, 15.7s under this gap low. So that was one area in which I should have been trading it. I wasn't. And this Friday was kind of the tell, right? So we scum down, hold the prior day's low by 3 pennies, and then fly up, right? So this was the day to get long. You can even have been buying at the HVC with wider stops. This name is just a little bit looser overall, but nonetheless, 7% would have been a legit stop here. And you would have had, nearly 3R, 20% to the upside. So, okay, we reclaim HVC, hold 15. That's kind of the tell. I'm not in this name still. I'm just kind of waiting. This would have been a decent day, but I wasn't aggressive here. This would have been another day. If we had come down to the HVC, I probably would have tried to get long, but didn't. We weren't right on it, which I wanted to be. So, boom, follows through higher without us. There's nothing to see. Now, I don't want to chase, and I do not chase. I really, the FOMO is not something that great traders implement. It's not a strategy. So I really try to avoid FOMO at all costs, knowing that, the HVC was my spot. Didn't get to it when I was over here, so I'm going to wait. Or, if HVC if price doesn't actually come to the HVC, I have to be waiting for a better pattern, right? So none of this really screams good pattern in terms of tightness, but then we get something like this, right? So this is the tightest range day since the gap up, so that's telling. And it's on the second lowest volume since the EPS report. And so to me, this is sort of like a bingo bar. Like you look back and you're like, oh, dude, I should have been long that day, and that's bingo, okay? And so that's how I'm viewing it right there on Thursday, December 7th. I looked at this and I was like, damn, that looks really good. So I put it on the focus list the next day, got long here, actually had a pretty sizable position, which was just kind of dumb. If this had taken off this day, it would have been nice. That ended up stopping myself out, rebuying with a little bit less size, and then today we followed through higher, and I sold 1/3 at 5%. So that just shows you, a broad picture of, okay, so here's trade idea number 1 in terms of trading the HVC. Multiple days after consolidation, finding whole numbers or other technical patterns like, holding the gap up low, the 10 EMA, et cetera, et cetera. That's another part of this trade. And then ultimately not chasing in this section when moves start. And then finally looking and being aggressive when you find that price edge, whether it be consolidation, whether it be a moving average, doesn't really matter. It just depends on your setup. And then executing when things align with your strategy. So 6 minutes, hope that was helpful, kind of giving you an idea of what LMND is doing, how I viewed it originally. And then now I talked a little bit earlier about Path being in a similar situation to this area and then retracing, kind of making a U-turn. So Path, it obviously is not the exact same. It doesn't come down to the 20 EMA, but it is doing this sort of pattern inside day, and we'll watch it to the upside here. Now, Roku was another one I flagged tonight with a pretty similar pattern to LMND. So here we traded, let me just move my big head. Here we have 2.38 million shares, which was Friday the 24th. So that's right after Thanksgiving. So we got a half day here, not a full session. And then here we have 3.24 million shares. So this would be the second lowest volume. And now we have an inside day above the 10 EMA. Risk is pretty legit on 100, right? So I'm talking 3%. And if this thing can follow through higher tomorrow, it's decently the exact same setup as LMND. So this will be on my focus list for tomorrow. And this is how I'm kind of connecting previous trades to future trades using blueprints and then going from there. So I hope that was helpful, and I'll talk to you guys tomorrow. See ya.